The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I've got two more stocks for your aggressive growth radar screen. So let's get right to it. Our first stock is going to be Everbridge, and that's EVBG is the ticker. It is a Zacks rank number one. That's a strong buy. That's the best Zacks rank you can get. And it's got that great growth divergence that I love to see. A very strong growth style score, so an A, and a very weak value score, an F. People ask me all the time, why do you want an A and an F? Wouldn't you rather have two A's? And I say, well, growth investors and value investors are looking for different things. So when I see two wildly different values on the Zacks style scores, that tells me I'm in the right direction. I'm on the right path, headed the right direction. So this stock has seen a little bit of a correction here, going 35 down to what, like 28, 27 and a half today, down another buck and a 140. Woo! Pain. So let's take a look at what's going on here. We can see with the numbers that we normally look at, we see earnings history. Does management communicate to Wall Street in a good way so that they can beat the bar? And they can. Good average size beat here. I don't like this trend of down, big beat right there, and then lower, and then lower. It's like beats cut in half, cut in half. I wonder if that's like a rap album. Beats cut in half, cut in half. It should be. All right, so estimates, no change. 1 penny and 1 penny. This is a Zacks rank number one. I'm going to have to check on the rank. You know how these things go. Sometimes this could also mean that there's a lot of stocks that are seeing negative revisions here, and that's kind of true. There's so much talk of recession. All right, 6% growth this year, 7% growth next year. That is not a lot for a. What is going on? Well, we see the quarterly growth we've seen decent right here, so 14%. Your price to forward earnings 19 times. So just a little bit over your one, peg your growth to earnings growth. So that's good to see. Price to book is pretty low here for one of these names. This is an asset thin company, so we'd expect to see that being a lot higher. Price to sales also very low. We've got negative operating margins here, but I mean the company was earning money, as I remember right from that last slide. Same thing for that margin. So a little bit of disparity inside the numbers. But let's take a look at the chart, and the chart tells the tale of what's going on here. Big slide here. 160. My eyes aren't working so good today. So 160 down into the 30s, and yeah, we've been beating the number, but we've really been stagnant down here, and we are probably at the low end of the range. Now, if you want to believe what you see here, big step ups in earnings, and when you see that, that's going to push this stock back higher. So could this stock could easily double. I could see this stock retesting right in here in the 80s if things continue to get better. So EV, let's bring it up here so that we can all see it, and I'm not hiding it. Don't put it under a bushel basket. Everbridge, EVBG. All right, on to our next one. And this is Asure software. We got a tech theme today. Asure software, ASUR. Ooh, my thing got bigger. Okay, it's a Zacks rank number one. That's a strong buy. And again, we got a great divergence here. A for growth, D for value. We have their earnings there, and we see the stock has done this sort of thing. And we love to see that. I love to see that. I don't know if you love to see that, but I love to see it. Let's take a look at our surprise history here. We've got a nice solid beat, smaller beat, back up to a bigger beat, and then a monster beat. Look out. 1,600%. We're looking for a penny and we get 17 cents. Get out of the way. That skews everything. But, big monster beats, I'm not going to say they're a bad thing. Let's see. So estimates next quarter bumping up 4 cents, 14 to 18. Go from losing money to making money next quarter. Love to see that. 28 cents to 35 cents. That's great. And then introducing our brand new estimates here, 44 cents. But still, that's good growth for for next year. We'll slide on up the page. Let's take a look at our revenue growth. Tens. We love tens. Woof! Brian's having issues today. So 10% this quarter, next quarter. This quarter, this year, next year. So what's really going on here? Let's check all the numbers out. That's what I love to see. 38% top line growth most recently. 41 times forward earnings. That's a big multiple, but we've got good growth. Price to book only 2 times. Wow. I love it. And value investors should be loving that too. Price to sales only 3 times. Margins go from negative to positive. We love to see that. So I like the story here. Let's take a look at the chart. If I could just figure out how to make it to the chart. Okay, here we go. All sorts of problems. Boy, the stock was going down, and looky outy, that is a rebound. I don't want to say that it's gotten ahead of itself, but it might have. Here's where your earnings line is, but the stock at 16. Still, if things look like they could still keep improving here. Only 10% growth expected for the year. If they turn in 15% and do that again next year, I think that they have a solid chance of continuing the run. But it's clear that investors have figured out that this stock is one to keep on their radar screen. So that's Asure Software. It's ASUR. Well, thank you for joining us this week with Zacks Rank Buy. Be sure to join us next week when I'll have 2 more stocks for your aggressive growth radar screen. And in the interim, be sure to go to Zacks.com/promo for all our latest promotions.